and today I'm going to be doing Increase Your Financial IQ by Robert Kiyosaki. The investor who invests for capital gains as well as cash flow. Years ago, old-time stock investors invested for both capital gains and cash flow. Old-timers still talk about the price of a stock going up as well as paying the investor a dividend. That was in the old economy, the old capitalism. In the new capitalism, most paper investors are looking for the quick buck to make a killing. Today, the big investment houses are hiring the smartest whiz kids out of college and using the power of supercomputers and computer models to look for the slightest market patterns they can exploit. For example, if the computer picks up a 1% differential, let's say on tech stocks, the investment house will bet millions of dollars, hoping to gain 1% on millions of dollars in a few hours. This is very high leverage and very risky. These computer models also cause a lot of the volatility in the markets and often cause crashes. When the stock market announces that the program trading has been halted, it is talking about these computer programs being halted. The market crash if the computers say sell. The markets crash if the computers say sell. If the computers say buy, the markets boom and then they crash. In other words, prices can go up or down for no fundamental or business reason at all. A stock price may have no relationship to the value of the company because the computer created an artificial supply or demand. If you recall the dot-com era, companies that were not companies but rather just good ideas were valued at billions of dollars. And companies that were really valued had their share prices trashed when the dot-com boom busted. As an old-time investor in this new area of capitalism, I must be smart enough to invest for capital gains, cash flow, leverage of debt, and tax advantages, as well as be above the turmoil of the whiz kids and supercomputers cause in the marketplace. For example, I recently purchased a stock, and even though I do not have control because the company, an old boring industrial age company, historically paid a steady 11% dividend, when the share price dropped in the recent market crash, I bought the stock because the price of cash flow became cheaper. So I do occasionally buy paper assets, but I tend to buy for cash flow. Being a little guy and not having control over the company, I do not use leverage. I only invest with cash I can afford to lobe if I'm wrong. If this particular stock goes up in price, I might sell because I like investing for both cash flow and capital gains. My ROI, return on investment, goes up if and when I can receive both cash flow and capital gains. There are three components to being a good real estate investor. They are number 1, good partner, number 2, good financing, and number 3, good management. And then I'll read those in a few days. So basically, when investors years ago used to invest for capital gains and cash flow, now in the old capitalism, now in the new capitalism, people are mostly doing it for capital gains, make money really quick. Robert, he mostly buys for cash flow, but he also does a bit of capital gains. And A Permanent Prescription is a book about how my mom went from being a doctor to buying apartments, and about how she bought them and what they look like. Okay, I hope that. If you did, please like and subscribe. Bye!